Hey everyone, this is Dave Dubeau with another episode of the Property Profits Real Estate Podcast. Today, zooming in, we've got a fine young entrepreneur, Cody Yeh. How are you doing today, Cody?
I'm doing fine. How are you doing, Dave?
I'm saying yay. That's what we got on your hat all over the place there, man. That's awesome. So
Yeah,
Cody
there's two
is
more at the back here.
he is a real estate entrepreneur. He's also a stocks and options guy too. So we're going to be talking today a little bit about how he combines the best of both worlds to create wealth for himself. So Cody, good to have you on the call.
Yeah, thanks for having me. I'm very excited to chat about stocks, about real estate investing, and anything personal finance. Really.
Yeah, sounds good. So first of all, you came from Taiwan. You moved to Canada when I believe you're 18 years old. So you're
Yes.
first generation. You live in Toronto now, if I'm not mistaken. Is that right?
Yes.
Oh, right.
Originally landed in Vancouver, 2 years there, applied to U of T, went to school. Yeah.
And you got a degree as an engineer. So you're a smart guy too.
Well, I wouldn't say smart. I'm just don't like reports, somewhat good at math.
Well, for those of us that are mathematically challenged, that qualifies as being a smart guy. So that's very cool. So you got one of those corporate jobs. You did that for a while, and then you said, "This sucks. I want to do something else." Tell me, walk me through that process for yourself, because you're a young guy. It's not like you put 20 years in and then finally figured it out. How did that all come around for you?
Yeah, and I never share this on any other podcast, but the truth is, I talked to the higher management at the company I work for, and it was actually part of their plan to let us young people and then pay us overtime. And I was doing a lot of overtime from 2013 to 2019 and thinking that I could save up and get ahead in this finance game, right? But I pay a lot of tax. But the thing is, the management were trying to let us work really hard, pay us a lot of overtime. But once you get to a certain level, they stop paying you overtime, where they pay the one time. So by that time, they hope that you already have a family, have some kids. So you're kind of stuck. You have too much liability to move, right? But I kind of realized that, and I was chatting with the upper management. They're kind of smiling. They say, "Yeah, that was our part of it, right? The game." And I'm like, I never, I think that's part of the game. But I realized that, hey, if that's what we're doing, but as I move up the management role, then the more hours I work, the more stress I have. It's not the other way around. So I'm like, wow, this is not what I was looking for. And plus, for people in my generation, right, the entire pension system. Well, first of all, should we trust pension system? That's one topic. Next problem is, should I keep doing this, right? So I kind of make a decision and say, I've been doing a lot of things on the side. I should probably look for different things and start just working 30 years. And really the pension is different for us, right? It's not like work for 30 years.
What sparked? I mean, I get it. You figured out that the game was rigged against you in the corporate world. So what sparked that initial search for something different? What was like your first aha revelation that there was something outside of the corporate world?
Yeah. To be honest, both my parents are not entrepreneurs, so no one really taught me this. But when I go out to a lot of real estate investing events and I see people who might be around my age or older, and they seem to be living a different life, right? And they might not start from there, but they work hard to get there. But it's not because their income is bigger. It's because of other investment like real estate or stocks or just different vehicle, right? Active business, small business they're running, and eventually they can fire themselves or not fire themselves, hire people and leverage, right? So that's how I see the three pillar that people are getting to where they are, but not just by working your way up in the corporate, right? So that's kind of my aha moment. And I just don't see myself doing that. And I just, the definition of insanity is keep doing the same thing and expect different results, right? So I realized that, I keep hearing that. I'm like, okay, I'm going to do something different, right?
So what was your first stab at it when it comes to doing something different than, trading hours for dollars?
Well, I started playing with stocks in 2011 when I was in school, second year. And 2016 to 2018, I was day trading in the Asian market because of a 12-hour difference. So I can actually have a second job, really. And when I'm not doing day trading, I'm actually attending a lot of real estate seminars. That's when I say, okay, I need to save up more for my down payment, right? And that's when, I didn't save up enough. I just put in 50K in my mom's investment in Toronto. Now it turns out to be genius, but at that time I just said, I don't want to use my first time home buyer. I don't have enough money for a down payment for a $500,000 house. So here, mom, I want 50% of that. And she said, fine. Right. And then after that, I keep saving by my single family home and 2 more duplex after that. And that just keep accumulating. Right. And then we all know what happened for the past few months. When this video comes out, might be even higher, but just all the property kept going up in Ontario, in the GTA area. Right. So.
It's definitely a good run, that's for sure. So that's awesome. All right, so you've got experience in both real estate and stocks. Tell me, in your opinion, what are the pros and cons to both of those? Because you do both, right? And
yes, I do both.
Yeah. So tell me from your standpoint, because I'm a real estate guy.
Yes.
And I tend to bash stocks and bonds and mutual funds and all that kind of stuff.
Definitely.
But that's because I'm not knee deep in it, like you are, and I haven't invested that time and gotten good at it. So
yes,
from your standpoint, what are the big benefits of real estate, big benefits of stocks, and how do they fit together?
Awesome. Great question. The benefit of stock and option is you have better liquidity. Okay. In the seller's market, yes, you can sell your house fast, but usually in stocks or option, you can have a click away, then you can get your money back. Might be a good thing, might be
out super fast.
Might be a good thing, might be a bad thing, right? So that's one thing. That's a major difference. Now, in real estate, it's inherently leveraged 3 to 5 times, right? Because you put down 20%, sometimes 5% to 35%, depending on if it's first-time home buyer or commercial, right? So you inherently leverage 3 to 5%. So because of that inherently leverage, the appreciation is magnified by 3 to 5%. So if you have the cash flow, if you have someone paying down your mortgage, the appreciation is a lot more, right? So it's good to build wealth like that in the long term, assuming if the price stays the same, it will go up, right? Now, on the other side, stock and options where I generate the cash flow, because especially in GTA area, it's hard to find a house right now without a bidding war. Not to mention, if you want to buy something and have a positive cash flow, good luck. You probably drive 1 hour, 1.5 hours if you want to find out MLS. If you find off market from a wholesaler, like I do wholesaling as well, you better make sure you do your own homework, because don't trust everyone, right? Do your own comps and all that. But it's very tough unless you put in some money to add value to the property. Then maybe you have a chance, right? Turn into a legal duplex to triplex or something that adds value, or buy a really rundown house, right? But if you don't do that, it's hard to find that cash flow. And that's where the stock and option comes in. On top of your full-time job or your full-time business running, you can use stock and options to generate the cash flow to buy more real estate. So when you buy more real estate, as real estate goes up, you refinance out and put it in the trading account, generate more cash flow. So now, instead of just having the choice of doing joint venture, raise capital, you could potentially, instead of buying one house, one property per year, now you might be able to buy 2 or 3 because you have another source of income, right? To generate that extra. It's not just sitting in the bank or sitting in a mutual fund. Yes, it's not earning a lot. You have another vehicle that generates a lot more cash flow. Then you can, whether that's, reduce the hour you work to give you that lifestyle, or, increase your lifestyle, or just save more, save faster, better return, and then put it into real estate. To me, that's a good circle, right? Active business, stock option, real estate investing. To me, that's the full circle of it.
All right. Sounds good. So in theory, this sounds very, very good. However, we've all heard of situations where people have lost their shirts in the stock market, and with options, definitely that's even a riskier strategy when it comes to investing. Now people have lost their shirts in real estate too. You guys in the go of Ontario right now don't remember when the markets have crashed, but they have. All right, you might again. You never know.
Yeah.
But so I mean, in theory, it sounds good. But what are some ways that people can minimize? And obviously, you can't teach all of this in a quick call. But are there ways to minimize your risk when it comes to doing this kind of stuff?
Very good question, Dave. I love it. I love people from different perspective, right? Real estate specialist. Here's the thing. When in real estate, you do your fundamental analysis. For example, you first pick which market you want to invest in. You do all your research on population growth, your GDP, hopefully diversify industry. And, that's really the big three. And interest rate, yes, you want it to stay lower, but you do your sensitivity testing. Let's say if it increased by 3%, can you still have a positive cash flow, right? So you do those things. Now, in the stocks and option, you do the same thing. You do fundamental analysis. Yes, you generate cash flow, but the underlying stocks of that company is the stocks you believe that will thrive in 10, 20 years. That's the same thing in real estate. The reason why I invest in GTA is because I believe it'll thrive in 10 to 20 years. So same idea I have in stocks. I'm not trying to get a quick one. When people blow up their account, it's because they get greedy. It's because they think this money is easy when the market goes up. So they think they're genius. So they over leverage. Then they can blow up their account. But if you stick to a good fundamental and you understand, hey, don't overstretch yourself, right? Don't overstretch yourself. It's just like in real estate. A lot of developers went bankrupt. Why? Because they stretch themselves too thin. They're highly leveraged. They get too greedy or they want to get too many land and wait for it. But if there's a market downturn, they don't have cash flow coming in, they're forced to sell at the worst price. And this could happen in stocks as well. Let's say I only have $100,000. I borrow another 200K. Now, if market turned down a 20% that we just see in the last 2 weeks, hey, then someone will knock on the door. And it's not just like banks. Banks might give you some time, right? No, in stock market, this is real. They will, right now, before they, you probably heard about the margin call, right? If you don't have enough money, someone will call you and say, sir, please put in this amount of money by this time before the market ends today. But now they don't do that. If you don't meet that requirement, someone will come in or artificial intelligence will come in and end your position at the worst time possible, right? And that's why this is getting a very bad reputation, is because a lot of people treat this as a casino, as somewhere they can make quick money, but they don't have the right mentality of say, we want to hold a stock long term. If it have a short term pullback, it's just like real estate. If it pulled back in 2017, it's fine. I'm still cash flow positive. People are still paying down my mortgage. And then the long term is rising, right? But a lot of people don't have that. When the market comes down, their fear comes in and they sell at the worst price. When the market go back up, they're, I missed out. Okay, now it's higher entry point than when they sold it. So now they're buying more, right? And now they pull back like, man, okay, I missed it. Okay, now it's still at a loss, right? So they keep getting into that game. Yeah. And that's where I say, it could be good or it could be bad because it's one click away. But you need to have the right mentality to do that, to win long term, right?
Yeah, that makes sense. So, Cody, you're talking about stocks, you're talking about options. I think most people understand what investing in stocks is all about. But can you give us a brief definition or description of what options are?
Yeah, options is basically how you can use less money to control the underlying stocks. For example, if you only have, let's say, it's almost like real estate, right? You use 1/5 of the price of the house and you're controlling the house, kind of in that way.
Kind of like a down payment kind of thing.
Yes, but there's quite complex if you really want to get into it. But the strategy I like to use is where I put the analogy where I buy off-market deal, where you will walk up to your neighbor. You already buy the house across the street. You walk up to your neighbor. Your neighbor is afraid his house price might go down by 20% because CMHC keep calling that since 2020, right? But you did your homework. You did your fundamental analysis. You want to own that property. It's still cash flow positive. If something happened, you can hold it long term. Good. Now your neighbor is afraid his house price might go down 20%. So you walk up to him and say, hey, neighbor, we will sign an insurance. I'll sell you an insurance. If your house price goes down by 20%, I will buy your house at, let's say 20%. I'll buy it. Okay, I'll buy it. So you don't have to worry about if it tanked more. But in return, because I sell you that insurance, you pay me $10,000. Now, next year come by, right? If the house price stays the same, we'll only drop 19%. We asked 3 appraisers to come in. If it only drop no more than 20%, guess what? You keep that $10,000 and then, you can keep selling that insurance to your neighbor. Now, if it dropped more than 20%, you're already prepared for it because it's cash flow positive. It's a place you want to buy anyway. Long term is good. So you buy at a discount 20% and you keep that $10,000 they pay you. So,
sorry, I was talking about options when it comes to stocks, not real estate.
No, I was using that analogy because you can actually
stocks. Because you can do the same thing with real estate. You can get an option on a property. Same idea, right?
So you can do this in stock option. Mm-hmm. And then there are hundreds and thousands of contracts on highly traded stocks, for example. Not giving out stock advice, but let's say all the FANG group, right? Facebook, Apple, not stock advice or anything, but all those big companies. There are thousands of people waiting right now for you to do that. They will pay you money when you sell them insurance. And this is available.
Or you can buy you can buy an option on somebody else's stock portfolio.
Yes.
So basically, they're betting on you're betting on the value going up, and you've locked in a price that you both have agreed on, and they're hedging that it might go down, and they can sell it to you. You have to buy it at a higher price.
So basically, this strategy is where someone on the other side want the market to go down or afraid the market will go down. So they pay you a money for that insurance. Now you're like, hey, I have a buffer of 20%. So if it goes down by 20%, I'm happy to buy that, whether that's a property or that's a stock, I'm happy to buy that at a discount, but you need to pay me that. Mm-hmm. So you're just here waiting. So if the stock goes up, you make money, stock stays the same, you keep the premium, stock goes down, not over 20%, you don't have to buy the house. Right. If it goes below that, you just buy the house. The house you want now is at a discount. Exactly. Right. So
you can exercise your option.
They can exercise and force you to buy it. And you just say, oh, now I get the stock I want at a discount. Great. I keep all the premium they pay for this insurance. I keep it all. So I further reduce my cost of ownership. Right. So in a nutshell, that's kind of like the strategy for it.
So Cody, there's obviously a heck of a lot more involved. I think you've got some education. There's some ways for people to find out a little bit more about this. If people want to find out more about Cody Yeh and how you're combining real estate and stocks and options, what should they do?
Oh yeah, I run a free webinar once every 2 weeks, and it's at www.codyeh.com/free-webinar. I think you can put it in a show note.
Go to CodyYeh.com and then you can find the free webinar section.
Yes, sure. And they can sign up there. Yeah, and
then we'll put the links in here with the show notes as well, you guys.
Yes, I'm not sure if I cited right, but
that's all right. That's all right. All right, Cody. Well, this has been a lot of fun. Thank you very much for your insights.
Yeah, thanks for having me.
All right, my pleasure. All right, everybody, take care, and we will see you on the next episode of the Property Profits Real Estate Podcast. Bye-bye. Well, hey there. Thanks for tuning into the Property Profits Podcast. If you like this episode, that's great. Please go ahead and subscribe on iTunes. Give us a good review. That'd be awesome. I appreciate that. And if you're looking to attract investors and raise capital for your deals, then I'm going to invite you to get a complimentary copy of my newest book, right back there. There it is. The Money Partner Formula. You can get a PDF version at investorattractionbook.com. Again, investorattractionbook.com. Take care.